let's bring in another voice of this conversation, and that is Kristina Hooper. She is Chief Global Market Strategist of Invesco, well known to our audience. Kristina, it's good to, quote, see you again. I look forward to being on set with you once again. You heard the conversation. You heard the calls from those banks. There tends to be still this buying or optimistic bias on the street. You believe that to a point, correct? If I'm reading your research correctly, it's listen, be smart, think for the long term. You want to buy when things are less expensive.
Brian, that's absolutely right. But let me qualify that by saying that we can't think of valuations right now as an exact science, because these are extraordinary times. And the dominant factor impacting risk assets is not valuations, it is the Fed. What we learned from the global financial crisis is that when the Fed throws money at a problem, throws stimulus at a problem, typically risk assets do well, regardless of valuations.
Is there any way to gauge valuations right now? I mean, I think Tim made a great point that, you know, with all due respect to our coverage, I don't know what earnings are going to tell us. The CEOs don't know. They're not going to say anything. Is there any way to gauge exactly how cheap or expensive the stock market is right now?
I think it can be a fool's errand. Certainly we want to try, but it is just so difficult to do that. And I think what we need to do instead is look ahead to what we can imagine once a recovery gets underway, and also look to the policy tools that are being utilized now. It's nothing to sneeze at. We've got a Fed that's far more activist than it was during the global financial crisis. We also have a Congress that has been, up until now, fairly functional and relatively generous compared to the global financial crisis. So this is an environment that should be supportive of risk assets. Now, that doesn't mean a straight rally up. It means a lot of volatility, but I do believe that risk assets are benefiting from this environment.
Christy, it's Karen. Let me just ask you a question. I generally agree with everything you're saying about the Fed, but I feel like the Fed, the extraordinary measures that the Fed has done has gotten us to this point, this up 20%. And when I think about the global financial crisis, TALF was in the fall, and we actually didn't bottom for another 4 or 5 months after that.
That is correct, but I think that the market knows what to anticipate now, right? Because we've seen this before. So we're seeing a faster reaction time. That doesn't mean that this is over. Certainly, I expect more volatility. I expect down days and up days, but I do believe that as we see the Fed to continue to buy assets and really expand what it's buying, that should be a positive for stocks.
Just quickly leave us with this, Kristina. What looks from a macro perspective, sector-wise or whatever, good to you and your team at Invesco?
Well, technology looks attractive. It's an area, actually, where we're likely to see improvement in earnings and revenue once the economy begins to pick back up. Certainly, companies are likely to spend more of their CapEx dollars on technology going forward. Ditto for some within the communication services area as well.
Kristina Hooper, Invesco. Kristina, it's a pleasure to have you on. Thank you very much. Chat with you soon, hopefully around an actual physical table in person. Take care. You know, Dan, Nathan, I think I'm going to go to you too, because we've talked a little more, you talk about the MAGA trade and whatever. I think the one thing, when this is all said and done, whenever that is, the one thing we're going to learn is that work and how we live will change in whatever way. I don't know how big, but it will. And I think to Kristina's point, these big technology firms, whether it's through contact tracing, work from home networks, technology is very likely to be the big winner here. Would you agree or disagree?
100%. And I think the outperformance in the mega cap tech is telling you that. You know, I was just looking at Intel, down 2% on the year. Obviously a very, very cyclical part of the economy, semiconductors, and it was a big laggard to much of the space for the last 18 months, and it's really outperforming right here. When you think about some of the things that are going to come out of this crisis, Internet of Things is going to be a really important part of that. Some of the technology that goes into autonomy, that sort of thing. This is a company that spent the last few years buying companies. They spent $16 billion buying Altera. I think another $13 billion buying Mobileye on time. I mean, there's a lot of things that these guys have been piecing together over the last few years that they should benefit from. Obviously, their server business is really important too. But, it's hard to think about Microsoft. It's hard to think about Apple, Amazon, and maybe even Alphabet, given all the stuff that they have away from advertising that won't benefit from some of the new trends that emerge in this post-coronavirus culture.
Okay, I'm sure we got a lot more thoughts on that, but right now, speaking of technology and speaking of being at home, we've got some breaking news on Roku. For that, let's go to Julia Borston out west. Julia.
Brian, that's right. Roku shares spiking in after-hours trading after the company announced that it was giving an update on the impact of coronavirus. See, Roku shares up nearly 10%, saying that beginning in the latter half of the first quarter, Roku was starting to see the effects of large numbers of people staying at home. And for Roku, this has resulted in an acceleration in new account growth and an increase in viewing. The company withdrawing its full year 2020 outlook, saying it now sees first quarter revenues of between $307 million and $317 million. That's versus the $305 million it previously reported. It also reports 3 million new active accounts since the end of 2019, and it says it sees its first quarter streaming hours up 49% year over year. So, Brian, you were just talking about the tech trends that will be forever changed because of this. It looks like there has been higher adoption of Roku and his business, and we'll see if that sticks around as well. Back over to you.
Yeah, that stock up 9.5%. We'll see if those gains stick around. Julia Borston, breaking news there. Guy Adami, I mean, listen, there's things, Guy Adami, that are going to be permanent, right? These infrastructure and architecture changes we make. I wonder if some of the things like Roku is going to be temporary. Hopefully, we'll all be able to leave our home again one day, and I'll take you to a drive-in theater, Guy, for a malted.
Can't wait, and I'll have the Twizzlers as well, my own bag, by the way. But in terms of Roku, the stock, if you go back in 2018, and you go back and look at that stock, it topped out about $70, and then it fell off. If you go back and look over the last couple of weeks where it traded down to, it retested that level. I mean, these numbers are good. Kudos to Dan Nathan, who, when we were still doing the show back at the NASDAQ, he said, you got to avoid Roku. But here, I think you got to add to this position despite the move higher. I mean, I wouldn't be surprised to see this thing accelerate over the next couple of days. So I think this is good news. I think Roku, on the back of, you saw what happened with Netflix, I think the stock continues to trade higher from here, Brian.
Tim, your thoughts?
Well, in a world of haves and have-nots, you explained the backdrop for where these numbers come from. The question is sustainability. The question is the competitive landscape. And ultimately, the question is valuation of Roku. I have trouble in this environment buying a lot of these high multiple stocks, either the ones that are seen defensive in the short run. You might get follow-throughs, guys talking about. But ultimately, if anything, those are the stocks that are setting you up for not only, I think, significant disappointment in terms of their comps, but that which was defensive today, that's not necessarily got a moat around it tomorrow. I think you have to be really careful about chasing those stocks in the middle of this. And I actually think Netflix is one of those, but I've already said that. And that had a big day today. All
right, good conversation there on Roku. Breaking news, that stock up more than 9%.